All right, so we are looking for performance analysis in entity, how to analyze a company's performance. If you want to be very straightforward and go clear, we have to look out for the performance analysis from two angles. Performance analysis. It's your question 1, 20 marks. It's usually crazy. First, you should know how to analyze financial performance. Financial performance, use the ratios. Non-financial performance. Non-financial performance, you can use cost structure. You can use external and internal efficiency. External and then internal efficiency. Internal efficiency. That is all. So internal efficiency and then external efficiency, how to assess them. So take notice of that. And then competitiveness. Competitiveness. So these are the non-financial performance analysis and financial ratios, gross profit margin, net profit margin, ROCE, ROI, and then the rest. These are the main ratios that you should be able to understand. And then we are good to go. All right, so there's a question before us. I just want to scan through 2 questions on how to write the report for us. First, all what you have to do is that you get the requirement so clear. They say we should assess the performance. Question of this nature, it's a little bit tricky because not everything has been said. When I mention performance analysis, you have to, based on the information made available, you should be able to calculate which of the key performance indicators. So here you can see both financial and non-financial information from the above. It says that the tip is a theme park and then has for many years been a successful business, which has traded profitably. About 3 years ago, the director decided to capitalize on their success and reduce the expenditure made on new 3 rides. Reduce routine maintenance where possible, deciding instead to repair equipment when it broke down, and made a commitment to a regular increase in admission prices. Once an admission price is paid, customers can use any of the facility and ride for free. These steps increase profit considerably, enabling good dividend to be paid to owners and bonuses to the directors. The last 2 years of financial results are shown below. So all of them are here. Sales, less expenses, wages, repairs, net profit. So here, please and please again. First, there are certain ratios you have to calculate. What's the first ratio you can calculate? Here, financial, at least calculate Three issues, three to five financial ratios here. Calculate 3 to 5 non-financial indicators. First financial ratio you can calculate is the net profit margin. So you pick the net profit. Then you divide it by the sales revenue. So that's the first ratio you can calculate. Net profit margin. So after calculating it, easy to write a report and go. Second ratio you can calculate. There's a book value of asset at the start of the year. So you can say return on assets. So return on assets. Still pick the net profit divided by the assets. And then, so that's a ratio number 2 you can calculate. So here you start by saying calculation of ratios. First issue. Calculation of ratios and key performance indicators. Third examiner ratio. Third examiner formula. 20x for 20x5. Then you go. First ratio is net profit margin. It is a net profit over sales times 100. If you have your question with me, can you give me the numbers? What are the net profit for 2014? Raise 3 zeros. So just see 1045. 1045. 1045. What's the sales revenue for 2014? Sales revenue for 2014.
$5250.
So
I haven't raised the zeros up there.
yeah, because it's a ratio, it will even normally cancel off. Imagine we add all the zeros here. We add all the zeros here, they will still cancel off. Agreed.
Yeah.
So wouldn't raise any 3 zeros. So here for calculation of ratios, you raising won't be a problem at all. That is what we have to do. Okay, so we are through. We can I get the answer from here? Then go and do the next one. Next one to be 1372 to 200. 1372. 1372 2200 times 100.
So 2024 is 19.91%.
So 19.91%.
Then 62.36% for the next year.
62.36%.
36%.
Good. Have you seen that there's a drastic increase from 19, let's say 20% to 63% or 62%. So here your interpretation is that you've done well, but make sure that all the reason you assign the reason they did in the question. They said that now they are doing repairing and stuff. They are doing regular routine maintenance. So what they've done is what has caused the good news. Then the return on assets is equal to net profits divided by total assets. Please, this is man accounting formula. We beg you. Per the information given to us, those who are doing financial reporting, the return on assets should be net profit over net assets. So take note. But for MBA, net asset over the total asset based on the information provided. So net profit is still here 1045 1372. So what's the asset? $13,000 and $12,000. 13,000 and 12,000. This is what you get.
First one is 8.04%.
8.04%.
The next one is 11.43%.
11. So there has still been an improvement. All right, so the next ratio you have to calculate for us is this. By the information, you can calculate what you call changes changes in the sales, changes in the assets, changes in the net profit. That's all. So now we are done with the financial ratios. Calculate the changes. So percentage change. That one don't show any formula. Percentage change in sales, percentage change in net profits, percentage change in assets. Then that's all. So basically, that's all. Then now calculate the non-financial information. Number one. Find the number of here first thing, percentage change in the number of visitors. So how many visitors came during the year? That's the first non-financial ratio. So apart from this, percentage change in number of visitors. So first, you talk about number of visitors. Yeah, you can go straight for them, write the answer for us. You only get for the second year. Then you can find revenue per visitor. Divide the revenue by the total number of visitors and know revenue per visitor. Don't forget this question, there's no direction. All right, so now note we are done.
Please, can you give make a quick example of the changes in sales, assets, and net profits? I
Okay,
just
so
want to
let's
confirm
go.
something.
The new, this is the new minus the old, all divided by the old times 100.
Mm,
So let's do, but here no, we don't really need the workings. 325320 minus 5250.
mhm.
So what do you get?
Times 100, right?
Yes, please.
1.3% or 1.33.
So 1.33%. Then do the same thing for net profit for me. So do the same for the net profit and asset for me. Then you are done. Find the percentage change in visitors. Find a visitor. So here there's no direction. When you're done, you calculate, for example, you can calculate percentage.
So
Mhm.
percentage changes, you can only calculate for like once. You can't do for the others, for the other year.
Yes, you cannot do for 2014. You can only do for 2015.
Hmm. Okay, that's what I want to understand.
Um, all right, so I'm done with this. Next one. All of them. Then dividend paid is 500. You can divide the profit made by the dividend. It will tell you the dividend cover. So dividend cover is equal to the profit made divided by the dividend. When you're done, then you write a report on the whether the performance has increased or decreased.
You're saying what dividend cover? So dividends.
Dividend cover is equal to the net profit divided by the dividend.
Mm.
Please, do you agree?
Yeah.
Good. Then you also find percentage change. Then you write a report. If you pick each ratio you have calculated, if it has increased, is good. If it has decreased, is bad. All these ratios are profitability ratios. So increase is far better than decrease.
Mm.
And make sure that most of your reasons why in 2015 it sounds like even though the sales decreases, but they made the largest profits. So clearly it means that they've been efficient in controlling cost, as they said in a case at the initial part of the question. All right, so I'm done with this. Then write a report for 14 marks. Another question where you have to look out for is not this one. This question. This question to almost every sitting I solve. I'll come and solve it on Monday morning with you. Early morning. I may solve this particular one with you.
Which one?
This one, we call it Django Code. Is it Django? Oliver.
Oliver.
Oliver. Then Oliver, you can even do Oliver right now. Average price for female clients. Then the next one is Django. Yes, Django 2 is also another terrible one. But it's not difficult. Let me see if I can handle them. And there we go.
So say in the question we just did, there was no non-financial analysis.
There is a lot of non-financial analysis. A lot. Let me show them to you. Number one is the number of visitors. One, number of visitors is a non-financial. Now, two, you divide the revenue here by number of visitors. You know the average charge. This one is a mixture. Average charge is a mixture of financial and non-financial. All right, so basically that is all. So here, it's not like this is the only non-financial issue here. But we have other questions where there are a lot of non-financial issues, like cost structure, external efficiency, internal efficiency. All right, so try your hands on the Oliver so that I can explain, or let me see if I can clear Oliver from there right now. What's the first requirement of Oliver? First requirement of Oliver. So we should find the average price for hair service per male client 2019. So let's go and read the question. It said Oliver Saloon. Oliver is the owner and manager of Oliver's Saloon, which is a quality hairdresser that experiences high level of competition. The salon traditionally provided a range of hair services to female clients only. So they only give it to only female. A year ago, at the start of his 2019 financial year, Oliver decided to expand his operations to include the hairdressing needs of male clients. The price for the female client were not increased during the whole 2018 and 2019. The price for the female client were not increased during the whole year 2018 and 2019. First assumption, the female price has not been increased. So that means the female price they will use, and that one alone solve the problem. It has answered our question. They say that the female price has not been increased. But in 2018, only female they were serving. Check here, only female. 2018, this revenue is coming from only female. How many female were served in 2018? How many clients were served?
8,000.
Good. So if I've served 8,000 female clients, I didn't serve any male, and I've charged a revenue of 200,000. So what will be the price I charge for female? What will be the price?
$25.
Oh, so the price will be 25 cedis. So we'll take that. Just a second, friends online. So you say you had 25, right? You say you had 25, right? You say you had 25, eh? Hello?
Yeah.
Okay, so 25 cedis per female clients. Now, they said something in the question that the price they charge in 2018 and 2019 for female clients remains what? Remains what? The same. So if the price remains the same, let's find the revenue here. Female client is 6,800. Multiply this by 25 cedis. What do you get?
$170,000.
170,000. So this revenue minus 170,000. The remainder one is for male. So how much left? If 238,500.
$68,500.
68,500. $68,500. So how many male clients we served? How many are they?
3,000.
So we divide, then to give us the price. So questions of this nature is what ICA man accounting we are interested in. The answer is not too difficult, but we have to pass through a lot of thick and line before you can be able to get the answer for us. All right, so I'm done with the very first one. This is what you get as the price. Okay, so please what you get?
It's 17.91.
Good. So 17.91 is the price. You're done. And they asked us to do some computation, some ratios here. Let's go and see the ratio they asked us to do. You are done with the average price. They say gross profit margin. What's the formula for finding gross profit margin?
Gross profit over sales times 100.
Good. So we pick the gross profit. When you go up, gross profit is here. Where is the sales? Sales is here. Gross profit is where's the gross profit? What's the figure?
106,000.
Good, 106,000. Yeah, so that is that. One is to ask for net profit margin. So this is a net profit as well. Once there's capital employed here, they'll ask for ROCE. And then you are good to go with the
So you're saying net profit.
yes. Once there's net profit, they'll ask for net profit, they'll ask for ROCE, right?
Mm-hmm.
They also ask for percentage change and then non-financial factors. What are the
Yeah.
non-financial factors? They are here.
The number.
The number of all these are non-financial factors. So find the percentage change. So try the first one for me. What's the percentage change? Number of complaints. 12 to 46 minus 12 divided by 12 times 100.
Are we doing 46 minus 12 over 46?
No, new minus old all over old times 100.
So the new is the 46, right?
Good.
Sir, please, when you're done, can you please go through the average price for hair services again?
Okay. So what's the percentage change?
73.91%.
73.
Mm-hmm.
It should be much, more than that too. Because 46 minus 12. All divided by 12 times that.
It should be rather be 12.
Yes, because it's the new minus old all over old times 100.
It's supposed to be 283%.
Go 283%, 283.
83.3%, 0.33%.
What about the number of male clients? What's the percentage change?
Hmm? I don't think there's any percentage change. Because there were no male clients.
So anytime it has moved from 0 to any number at all, the answer will be positive 100. Agreed. And anytime it moved from any figure 3 to 0, there has been negative 100% percentage change. Agreed.
I said 3 to say 0.
Yes, it will be
Yeah,
negative.
negative impact.
Then from 0 to any number is positive 100. Agreed. So those were no calculation.
Mhm.
Okay, so we are done with the computation. That's all. The rest is the report writing. Yeah, I said I should go over the pricing, right? How you calculate the price. Oh, okay. So what happened is that anytime looking for percentage change, the formula is automatically percentage change. You're looking for example, I have 1,000 to 1,000, and the thing has increased by 20%. What's the new one? Increased by 20%. Can you find a new one for me?
1,002.
Okay, so this is the current. My current figure is 1,000. Now it has increased by what? 20%. What's the new one?
1,200.
Okay, so 1,002. So if the new is 1,002, and now I want you to find a percentage change for me. Let's see if we can get a 200 back. How are you going to get it? It is the new, which is 1,002, minus the old, which is 1,000, all divided by the old. The reason being that the old is the base where you are moving from. Do you get it? This is the
Okay.
base where you are moving from, and this is the new.
Okay.
So times 100. So it will be 200 over 1,000 times 100. That'll give you 20%. You've gotten the 20% back.
Okay. So how about the previous one that the other person asked? Or the non-financial? The non-financial calculation.
Then let me have the question again. I think the person asked for the price, right?
Yeah,
Now how we got the price?
yeah.
Okay, so the very first step, they give us a scenario in the case that when they started, they said the saloon traditionally provide range of hair services to female clients only. So it's a saloon that they serve only female. Then a year ago, at the start of his 2019 financial year, the saloon decided to expand its operations to include hairdressing needs of who? Male clients. However, the prices for female clients were not increased during the whole 2018 and 2019. But you see, then it means that the entire 2018, there were no male clients, true of us.
Yeah, true.
The male, but in 2019, then there was both male and female. But the examiner said we should calculate the price that they are charging male in 2019. When it comes to the table, so well, they said the number of client visits. In 2018, only 8,000 female came to the salon. If only 8,000 and we have earned a revenue of 200, so what would be the price for each female we served?
That was the 25.
Good. So that would be 200,000. That's the entire revenue divided by 8,000. So we had 25. So we had 25. Now, if it's 25, now the question is this. When I serve 8,000 customers, I'm charging 25, I get this money. But the same question told us that the saloon has maintained the same price for female both in 2018 and 2019. So when we come to 2019, realize that they were serving both male and female. So the female is 6,800. So multiply this 6,800 by 25 cedis. What do you get? So that's the revenue coming from female in 2019. What do you get?
170,000.
So it means that in entire 2019 revenue, 170,000 is coming from female. How much is coming from male?
That was a 68,500.
Okay, so that's the difference, 68,500. That's the one that is coming from male. So if it's 68,500, how many male clients served? They served 3,425. So if you divide this, that will be the price the examiner is looking for.
So that's 20 cities.
Good. So divide 20 series, right?
Yeah,
That's all. We are done.
meaning we are charging more female
Yes.
per price.
Yes. But it is fair. Female hair and then male hair. Which one? Which one do you think is more expensive to do? They'll add a lot of things in terms of the female than the male, right? It's only nowadays that some guys they like dyeing the hair, adding a lot of stuff to it. Previously, one way cut. After doing the shape, we are done. But it's not so. So 25 and against 20. Even me cry is too small. This one, if you send your own weave on or wig, the price is different. If they use their own weave on or wig, the price is so different. All right, so basically that is how we do the calculation. Then you discuss the performance of the company. Then you discuss the problems, the non-financial information as introduced. And then that is all. Then discuss the objective of transfer pricing method. Very important. Then Django code. This question is a little bit technical. It's not too difficult, but they only say discuss the financial and non-financial performance of Django code.
So please, what are the objectives of transfer pricing?
1, goal congruence. Objective transfer pricing is used to set a uniform objective for the entire entity. So it can help us to put goals together, achieve a common goal for coordination. 2, for performance measurement. Performance measurement. To also reduce taxes, higher impact of taxes. That is all. So these are the non-financial data. They have it here already for you.
So please, can you explain the basis for transfer pricing?
Basis for transfer pricing.
Or like just explanation.
Okay, so when you say transfer pricing, I'm suspecting it's after this sitting. After the next sitting, the people are going to write on Tuesday, the following sitting, 2025 exams. Transfer pricing is due for exams. What is transfer price? This is a mean of transfer price. Transfer pricing. Let me do the theory today. Transfer pricing. It simple means it's just a price at which divisions, autonomous divisions, will transfer resources to themselves. So let's assume that target pool, this is the head office. We have 2 divisions, Division A and Division B. For example, Division B, manufacture car parts. Car parts. Then Division A, do assembly of cars. Then target head office, sells cars. That's the sale of cars. So now the question is that anytime these people, they are related, all these three companies are related, all these three divisions, they are what? Related. So anytime they are selling among themselves, target is selling to division A, division A is also selling to division B and co. We don't call it sales, we call it the goods has been transferred. At what price? So that comes what you call transfer pricing. So transfer pricing is a price at which autonomous divisions, a selling division, will charge to transfer goods to a related party. It's all about related party. Because if you don't know the person, you will sell at normal price. If you don't know the person, you will sell at normal price. But if you really know the person, you will not sell at normal price. You do only transfer. So that is that.
So meaning there will be no margin.
Good, that's a good question. So there will be a margin, but the margin won't be like at market value. The margin won't be like somebody you don't know. So that's the transfer pricing. Now, basically, there are two main types of transfer pricing. There are two main price. There are only two. Number one, we have the minimum price, minimum transfer price, and maximum. You see, the minimum price, even though the word say minimum is the highest, let me assume that company division A and division B. Please, over here in it's divisions, autonomous divisions, meaning that each division is on its own. It's responsible to make its own purchases and buys. So let's assume that division A is buying from division B. Buying from. So who is the transfer? Who is the receiving company? Which company is the receiving the goods? Which company is transferring the goods?
B is transferring the good.
Good. So this is the one do the transfer. And then this is the one receiving the goods, right?
Yeah.
So who receive payment? Who collect money? Who will collect money?
B collects money.
B will collect money. So minimum price is a price. This one will charge minimum price. Minimum price. The least amount he'll be willing to take is the highest on the market. Take note. The least he will be willing to take, the least he will be willing to do what?
That's the least.
Yes, that's the minimum price. It is the highest on the market, even though it is the minimum, but it is the last amount that he'll be willing to take. At the same time, it's the highest on the market because if I'm selling things to you, you see, every division is on its own. I don't want a situation whereby I'll sell things to you at a very cheap price. Then it will reduce my profit. When we go to the managerial or divisional performance analysis, they will always chastise me that my profit is low. So I will not also transfer something to you that at the end of the day, it will reduce my division's profit drastically, where I'll be at trouble. The manager in question will go and has to answer questions. So at the end of the day, I also force myself to sell it at the highest price on the market, even though it's my minimum. Then, who will make the payment?
A.
So A will charge what you call, A will be willing to pay the maximum amount. So we call it maximum. So that's what you call maximum price. Here it is the highest amount the receiving department will be willing to pay for the goods. However, it is the least on the market. Who can explain why we say it's the least on the market? Why we say it's the least on the market? Because I am buying things from you and you are charging me. So the maximum amount I will pay, wouldn't it be the least on the market? So imagine the same thing I'm buying from you. Some people are selling it 3 cedis, 5 cedis, 4 cedis, and even 2 cedi 50 pesos. And you are selling to me. So how much do you think I'll be willing to pay for what you are giving me?
The least on the market.
The least on the market, because if I go to the market, I'll get to 2 cedi 50 pesos. And even besides, when you are selling to me, because I know you, certain costs I'll not be paying. Transportation I won't pay. Delivery fee I will not pay because you're in the same department. You're in the same department, so I will save certain costs. So I'll pick the least on the market and subtract the incidental cost that is likely to be saved from it. It will give me the maximum transfer price. That's all. So maximum transfer price is a maximum highest amount that the receiving company will be prepared to receive. At the same time, it is the least on the market. However, we don't have the best transfer price on earth. So at the end of the day, it pushes on to what we call a negotiated transfer price. Transfer price is negotiation. The two managers will come and sit. If the maximum is, let's say, 10 Ghana cedis, and the minimum transfer price is, let's say, 5 cedis. At the end of the day, these two people have to sit and talk. These people have to sit down and talk and settle the matter. So it ends up by you saying, we end up by saying transfer price is negotiated transfer price. Then that what you have to know is that how do we calculate the minimum price? The minimum price is the most difficult of all in calculating because there are two scenarios. We have where we have spare capacity. Then we have at full capacity. At spare capacity, it's just equal to the variable cost of producing a goods. That's all. You see, company B is selling the goods to company A. It has produced 10,000 cedis. Its variable cost. The variable cost is, let's say, variable cost is 20 cedis. Its profit is, let's say, profit. This is the cost. Profit is 5 cedis. So 25 cedis. If there's no what you call spare capacity, simple means here after supplying this 10,000 to somebody we know, the internal member, we will not miss out any external sales. Sometimes an attempt to sell the internal members, you won't get some of the goods we sell outside. And mostly there are rules that say that we have to meet internal sales or demand before any external sales come. That's one good thing. You see, when the product becomes so more scarce in the system, what happens is that now companies tend to sell to people they know. So if we have a spare capacity, it means that we are not losing anything. So the variable cost. So you multiply the 10,000 here by the variable cost of 25 cedis. Please, you know what goes into variable cost, right? Direct material, direct labor, those stuffs. So that becomes the transfer price. But if there's a full capacity, it means that when we serve the internal members, we will not be able to serve the outsiders. So hence, it creates what we call opportunity cost. An attempt to fulfill the internal sales, we neglect the external people. So hence, the transfer price, minimum transfer price is equal to the variable cost plus the contribution forgone. That's all. So here, it will be the 25 cedis. What if, because we are meeting internal sales, we are losing 260 on each other product we have to serve? So here it will be total of 10,000 times 25. That's the variable cost. Plus the contribution forgone, 10,000 times 2. And then that is all. I'm done with the minimum. The maximum transfer pricing is the easiest of all. Maximum is the most easiest of all. Pick the least price on the market. Least price on the market. Less transport cost. That's all. So from here, then we now talk about what is the objective of transfer pricing. What are the other methods we can use? Other methods. We have cost plus. We have market price. We have negotiated price. So that is all. Once you know the objective and then the other types of transfer pricing, you are good to go. When you,
Negotiated price, and we have the fourth.
the fourth, there are a lot.
Yeah. Okay.
Even the cost plus card, there are two. We have the discriminatory or discriminative. All right, so that's all. Back again to our question. So this question, you see here, they gave us revenue, they put a note. They gave us cost of sales, they put a note. They give us gross profit. So here we can calculate gross profit margin. It is a gross profit divided by the revenue. All right, so we are done. Then we go to the next one. They have also given us expenses. There's net profit. You see, they have breakdowns here. So also take time and calculate breakdown for both cost of sales and sales. Okay, so what you do is that you see they've given us breakdown. This is a breakdown of revenue. So individually, you must also do your computations individual. So you see,
Hey,
yes, please.
sir, please. Sorry, are we now starting this question?
Yes, please.
Okay, thank you.
You need it.
Sir, yes, so this was the question I was talking about. So please, let's continue.
Okay. First, they say we should calculate financial ratios. That's all. They've given us the non-financial data. So this is the non-financial. The top is financial. How do I calculate the ratios? Look, they gave me revenue for the entire company, current year, previous year. So then I can calculate gross profit margin. They also gave me the net profit margin. Net profit is also here. But you see, they gave me breakdown of revenue. Then they gave me the breakdown of cost of sales. Then indirectly, it means that I have to find the gross profit margin for individual products. So create additional table and columns to the extent that you bring household, that's the revenue, come and copy the cost here, the cost of sales, this figure comes here, 2394. Then the next line, you come and write the gross profit, then as a percentage. When you're done, you come and do the same thing for the previous year. You pick its revenue, match it with its cost. So product by product, match its revenue against its cost, so they can get an individual gross profit.
Please, can you say what you said again? I'm trying to understand.
Okay, so first thing, let me try and then do it. You see, they have given us combine their financial statements. They mention revenue, but just that their revenue is made up of how many products? 1, 2, 3, 4. 4 products make up the revenue. The same as the cost of sales. Once the examiner has given you the breakdown, we expect you to calculate the ratios also as breakdown. All right, so what to do is that you must also do the breakdown. So gross profit calculation. So write the revenue. Write here the cost. The revenue, cost of sales, gross profit. How many products do they have?
Four.
So what's the first revenue on the list? The first division, the first company.
Household goods.
Good. So you pick household goods. And this for 2000 and current year is 2016. So household, what is its revenue? Its cost of sales. So you can find a gross profit yourself. Next, after household goods.
Goods.
Then you get your gross. The next one is what?
Electronic goods. Electronic.
So the goods do the same thing. Click the figures here. Down to bring the cost, bring the gross profit here. All right, so that is that. So do all. All right, so you do all for the 4 products. When you're done, put the total somewhere here, and then you get it done. I'm done with this question. So this is how you do the calculation for all the items for 2016 and 15. I'm done. If you have any question, ask on the calculation.
Sir, please, can you come again?
Hello, sir. Are you there?
Yes, fully. So on that note, you are done calculating for all of them. So you combine the revenue breakdown and cost of sales breakdown. So you can calculate the gross profit.
No,
Yes, please.
sir, I didn't get you.
Which side?
Thank you. Sir, how do you, which figures are you picking to calculate?
Okay, so let's go. Let me do one.
Yes, one, yeah.
Okay, so give me two. You do for 2016 first. Give me the first product, its revenue. The first product is what? Household.
Yes,
What's the breakdown of revenue?
38,990
Okay, so 38,990. Good.
divided by the cost of sales.
38. This was the revenue, 38.
990.
What the cost is? What's the cost of sales?
23,394.
Can you come again?
23,394. $23,394.
Okay, 23.
394.
394.
394.
394. Then you will find a gross profit yourself. All right, so this have to be continued until you are done with all. Please, I'll be a bit talking now.
Sir,
Mm-hmm.
sir, so it will be the revenue divided by the cost of sales.
No, we are not dividing. We are finding gross
Yes, gross profits.
for
Okay,
individual.
so minus.
So in this case, sir, you subtract, right?
Yes, we are subtracting. We are not dividing.
Yeah.
To find a gross profit for me.
$15596.
15596.
Yes.
That's all. So that's a gross profit. So you can go ahead and find a gross profit margin. What's your gross profit margin?
So gross profit over your sales times 100.
Yes. This gross profit divided by what? The sales, right? Times 100. That's all. So when you repeat this, don't forget this is 2016. You do this for all the 4 products. Come and pick 2015 and continue and do for the same product again. Okay, so you do all for all the rest of the 4 products. All right, so basically that's all. Please do you understand how you should do it? This is 2016. When I'm done, you go to 2015 and do the same thing over there.
Please, what's the essence of calculating the gross profit margin for each of the products?
Because the examiner give us a breakdown for each. And the essence is that they did not bulk them.
And we have to do an assessment for that. Like discuss the figures. Target.
Yes, please.
So I was asking, so after the calculation, then you might have to do a discussion on that, like on each of the products. Are you there?
Yes, please. I'm here fully. So gross profit computation for individual, because the rationale is that the total figure there is not coming from one product. So if you use the total to do analysis, you may get it wrong because sometimes the individual and the totals are a little bit different. So that is why we have to use more something which relates more to them. We are done. More question. Then write your report. You do for both years. After doing for 2016, then you come and do for 2015. But how the table is complicated, after you are done with the 2016, then you come and do 2017 for the calculation of the gross profit margin. All right, so more questions. Okay, so let me go to the part 3 aspect. That means So included in this cost, the cost of running a customer service department is this. But you see the admin figure here, it has been already been captured. All right, so basically that's admin figure is this admin figure. Hey, what is going on? All right, so that is all about this. Please, the admin figure is already in the question. So you only do your calculation and write your reports for 20 marks. All right, so basically that's all. Any question? So I've come and scanned through your question one with you. I know that Roy, residual income and more question. So I'll be solving it one with you like that, but I realize I'm done with all my questions. Please, if you don't have any question, let me leave you for you to go and try that question. Send me your answer when you are done. This particular one. Try it yourself alone. Share your answer with me. Let us discuss before Monday.
Which one?
The one I explained, the one with the breakdown.
Okay.
Any other question? More question before. All right, so if there are no questions, let me save my whiteboard. Hey. Any question? All right, so if there are no questions, permission to end it here. Please, we're meeting again on Monday. Then tomorrow too, yes, when I come and solve one cracker question with you in that order. If you have any questions, do not hesitate to let me know.
Target man is after FR.
Yes. After the FR paper.
We are sad like that.
Come again. Come again. Like we have
I
started.
said after the FR that we become one like that.
Oh no, you will not be sad. FR there, this trip, what we've done, you won't be sad. And professional exams, if one paper ship you and you are done with all the papers, don't give up. For you know, your paper is the next one. So
We hope so.
then tomorrow too, yes, tomorrow too, I'll shoot a meeting to come and solve one question. I'm still looking through those questions I've given you that I've not solved with you that they are critical. When I call the meeting, and let's try and enjoy early. Today I was here early, but of late I don't know when I teach and it's enter into 9:30 to 10. I don't see things well at all.
It's climate change.
I don't know, but meanwhile, previously I can handle a class from 2 days, 72 hours, changing students non-stop. But now I can't do that.